The second thing that I want you to understand, the second tip on how to study the accounting standards is this, that when you pick each accounting standards, there are a number of things you have to know about the accounting standards. The first thing has to do with the objective of the accounting standard. So whatever accounting standard you pick, we need to ask ourselves, what is the objective of this accounting standard? So when you pick IFRS 15, revenue from contract with customers, what is its objective? When you pick IAS 16, property, plant and equipment, what is its objective? When you pick IAS 40, investment property, what is its objective? So whatever accounting standard you pick, the first thing you need to ask yourself is, what is the objective of this standard? Like, what are we trying to achieve here? Because that is the starting point. You need to establish what the standard is trying to achieve so that you get the studies going. Then the second thing is going to be some key definitions, because there are a couple of standards that will have some things that you need to take their definition seriously. When you take IAS 16, what is property, plant and equipment? What is the carrying amount? What is the fair value of an asset? What is the economic useful life of an asset? What do we mean by depreciation? What is impairment? We have to understand these terminologies. When you pick IFRS 15, revenue from contract with customers, what is revenue? What is performance obligation? We need to understand these terminologies as we go. So there are some standards that have some key terminologies that you need to know about. That is the second thing. So the objective, key terminologies. Then the third one, this doesn't happen or apply to all the accounting standards, but for most of the accounting standards, we need to know about the initial measurement and initial recognition. Now, there is a difference between measurement and recognition. Measurement is the determination of the monetary value at which an item will be carried in the financial statement. Recognition, on the other hand, is the incorporation of a transaction into the financial statement. So we need to ask ourselves, what is the initial measurement? What is the initial recognition? Now, so if we take IAS 16, property, plant and equipment, the initial measurement is simple, that the initial cost of an asset shall be the purchaser's cost plus all other directly attributable costs incurred in bringing the assets to its present use. That is the initial measurement. So what is the initial recognition? When we determine the value, then the recognition will be we debit property, plant and equipment, and then we will credit whatever has to be credited depending on what was included in the initial cost of the asset. So that is what we must understand: initial measurement and initial recognition. Then after that, we come to subsequent measurement. Subsequent measurement is how that item, that transaction will be recognized in the financial statement after it was first incorporated into the financial statement. So it depends on what we are dealing with. If it is property, plant and equipment, then on subsequent measurement, they must be carried at its carrying amount, and which will be the cost or the fair value less accumulated depreciation and or impairment losses. But the assets can be carried at the cost model or the revaluation model. If we are dealing with provisions, and that is IAS 37, and we are using the discounting factor to determine the initial value, then on subsequent measurement, the rule is that we need to do unwinding or calculate the finance cost in respect of the provisions, and that must be recognized in the profit or loss account and included in the provisions on the face of the statement of financial position under current liability or non-current liability, depending on when the payment is due. So we need to know about subsequent measurement. So objective, key definitions, initial measurement and initial recognition, then subsequent measurement. Then the last thing that you must know about each accounting standard you pick will be disclosure requirements. For some reason in the ICAG, the examiner has not really been excited about disclosure requirements of standards. But when you pick any standard at all, there are guidelines on what has to be disclosed in the notes to the financial statement in respect of certain items, certain elements. So when you pick property, plant and equipment, again, what are the things we are supposed to disclose? Number one, we are supposed to disclose how the initial measurement was calculated. We are supposed to disclose what method we are carrying the asset at on subsequent measurement. Is it at the cost model? Is it at the revaluation model? What was the rationale behind that? It must be disclosed. Then what method of depreciation are we using? Is it the straight line method, the reducing balance method? During the year, did we revalue the asset? Is it an upward revaluation or downward revaluation? How did we account for that? It must be disclosed. During the year, did the asset suffer any impairment? If we tested for impairment, how did we test for the impairment? And if the asset was impaired, at what amount? How did we account for the impairment? All of these things must be disclosed in the notes to the financial statement. So when you pick the accounting standards, you must know about the objective, you must know about the key terminologies, you must know about initial measurement and initial recognition, you must know about subsequent measurement, and then the disclosure requirements. That is the second thing you must understand about how to study the accounting standards.